I had a very provocative tweet out there with a picture of him saying, hey, we may or may not have talked about Intel. And I'm still not going to say anything because that's in the lockbox, right?
Wait, you talked to him and you're not going to share everything? Come
I
on,
know. Can
man.
you
Come
imagine that?
on.
Kind of like that trust with
Bill.
executives.
Yeah,
So,
yeah.
Founder and CEO of More Insights and Strategy, Patrick Moorhead.
6, 5.
CEO of the Futurum Group,
Daniel Newman.
6, 5.
You know a lot about what's going on, Moorhead?
I think we do.
So, Daniel, we told our audience about a new format that we're going to be introducing, and here it is, episode 253. Daniel, how are you doing, buddy?
Yeah, we are so back. We promised for like 2 months, and let's be clear. The team has done a tremendous job putting this together. I hope everybody liked that intro. Other than you going first, I got no issues with how that intro went, but it's kind of like, how are you going to put me second? I mean,
yeah, maybe we'll rotate.
I don't know, best for last.
Age before beauty, Dan.
Is it best for last? I don't know. There's always some sort of, it's just like hair can't grow on a busy highway. So.
Yeah, exactly. So, hey, I want to tell you a little bit about the show. So we're going to have three segments here. And oh, by the way, this is going to be fully produced, not live. It's the trade-off that we'll be making. But we will continue to make the same mistakes we make live. Probably won't get cut. But let me tell you a little bit about the show. So first off, we're going to have a segment called the Decode. Okay, and this is where we essentially break down the news of the week. Try to separate the noise from the signal, or the signal through the noise, which I think you've come to appreciate. And then we're gonna have a segment called The Flip, which one of us will take on a certain view. Right, this week it's on tariffs. It's going to be a for this or against this. Caveat: Dan and I might both be for something, or we might both be against something, but we're going to play both sides of the coin here. We might even have to flip a coin to see who goes first. And then we're going to end the show talking about markets. We haven't figured out what we're going to call this thing yet. Is it market madness? Is it bulls and bears? But Dan, you and I spent a lot of time on broadcast shows, talking to CEOs and CFOs about earnings, and it's an ancillary part of what we do about industry analysts, and that's where we're going to chat about that. So, Dan, how's the week? I know you're probably going on a big vacation coming up. All I know is I'm staring at 4 straight weeks of travel.
Me too. I'm just, one of them happens to be a vacation. But, I'm very excited to head out, and I'm going to virtually attend GTC. Pat, I thought about it. Like at CES, I virtually attended the keynote, had a better experience, got more out of it, and definitely had better social, and still got to do all the broadcasts. So last year, and again, I know GTC, the ultimate pinnacle moment of all things AI. What is it? The AI Jesus, the godfather of AI, some other silly metaphors about Jensen. But remember lining up around the building and then standing in the hallway because by the time we actually got to the seating opportunity, we didn't get sat. I'm not super sad about it, but I am going to miss being there with you. It does break my heart to know that I'm going to come back tan and bronze and happy and relaxed, and you're going to be all stressed out. But I'll enjoy the next 3 weeks of travel with you for sure.
Yeah, exactly. I'm a great person to be around when I'm stressed. So, hey, let's dive into the Decode. All right, Dan, a lot of stuff happened. It's so hard to choose these topics. But ServiceNow made a major acquisition. I know they described this as a tuck-in, but it's the largest acquisition they've ever done before. What is going on here?
Yeah, when you have valuation in the hundreds of billions, I guess a $3 billion plus or minus acquisition becomes a tuck-in. It was one of those that kind of started blowing up my phone over the weekend. The scoops came out of Bloomberg and others. The secret was no longer being hidden. And I got a note on Sunday that I was going to talk to CEO Bill McDermott in the morning. Read the press release, and I said, "Holy smokes!" Moveworks is not necessarily like a name that just rolls off everyone's tongue in the tech space. But when I started to listen, this company, ServiceNow, let's start with ServiceNow, has been in a major transition from a IT services management company with really great rule of 50 plus growth. Has, Bill is one of the best cheerleaders in sales. I mean, in leadership, he comes in and really knows how to rah-rah the team. But he's been talking a long time about this big, meaningful, meaty disruption that's going to take place inside of the application space, what I like to call the software industrial complex. Right now, any company that's buying software has this terrible lock-in with tons and tons of seats. Whether it's SaaS or not, it's often seat-based, meaning you're paying every single user. It's really expensive. The future is not that, okay? The future is agentic. The future is going to be real-time abstractions of a software layer. It's going to be a single point of truth that you're going to be able to talk to. It's going to look like ChatGPT, but it's going to have all your enterprise data. It's going to have, the database, the integration, the language models. They're going to be specialized models. They're going to be large models. So this is where ServiceNow is going. So where does Moveworks fit? Well, this is a company that really has had all the back end stuff with ServiceNow has all the back end stuff for workflow automation, just workflow it, right, Pat? But the bottom line is the front end has still been one of its build out. Yep. I saw that smile. So what's happening in ServiceNow is connecting the back end to the front end in this HR space. And it's not really just HR, but it's HR, it's enterprise search, and it's basically employee experience workflow. So when an employee wants to know something, do something, see something, learn something, they can basically punch it in. And Moveworks is going to accelerate that sort of digital work experience and HR platform that ServiceNow has been pushing. Bottom line here, ServiceNow has said we are going to compete in CRM. ServiceNow has competed, but it's been ancillary. So the Salesforces, the Oracles of the world, the Workdays, all should be on notice at this point that ServiceNow is coming for your lunch money, okay? And I think that had been a little bit of the line. And yes, every ecosystem is going to continue to have these sort of competition, and there's going to be integrations and APIs and, data integration platforms. But ServiceNow is going for it. They see a future that's agentic. This gave them millions of workers on the platform. It's going to integrate with what they're already doing, their database. And I really think that this is a potential game-changing move for ServiceNow. And by the way, positive on the economy to see multi-billion-dollar acquisitions being made. I also think this will go through quickly. I don't see this one having any issues with regulatory.
Yeah. So, when it comes to acquisitions and innovation, right, there's always three options, right? Build, buy, and partner. And Moveworks have been a partner of Salesforce. In fact, as you alluded to, they had racked up a ton of business, right? They have 5 million employee users that they brought on in 18 months, and 90% of its customers are deploying the technology to all of their employees. So this isn't some nascent startup that is, fixing to have revenue. I think the number was $100 million in ARR. I could be wrong on that one, but so they decided to buy. I fully believe that ServiceNow could have built this, but this is a time to market play. And when you have major transitions, time to market matters. It's not everything, but it's something. And if you look at ServiceNow's back-end capabilities, like you alluded to with AI, and you connect those with Moveworks, I have to put a smile on my face, Daniel. By the way, inside joke between Daniel and I, between connecting the front end and the back end. It's kind of like all I think I talk about, a theme that I talk about there. But anyways, connecting the back end to the front end, you have some serious magic. And when you think about, let's think about employee search, right? What are all of the reasons you would do employee search in an HRM system on top of Workday, or even a Salesforce with CRM, finance systems with ERP, and sales. So it makes a lot of sense. I think the markets are spending way too much time on the size of the deal and not thinking about the downstream potential value of this. But hey, those are the markets. I do want to thank I didn't get a chance to talk to Bill, but I did get a chance to talk to the president and CPO and COO at ServiceNow, Amit Zavery. We had a very good conversation post deal, kind of breaking it down, getting into to some of the nuts and bolts of this. So good stuff there. Let's get into our next topic, Dan, and this is a smoking one, and that is a new CEO at Intel, Lip-Bu Tan, which, interestingly enough, both you and I met when we were at the SIA dinner. And who knew that he had just stepped down off the board of Intel, and we may, I had a very provocative tweet out there with a picture of him saying, "Hey, we may or may not have talked about Intel," and I'm still not going to say anything because that's in the lockbox, right?
Wait, you talked to him and you're not going to share everything? Come on,
I know.
man.
Can you imagine that? Kind of like that trust with
Bill,
executives.
yeah,
So,
yeah. By the way, I think your picture was great, but you kind of tweeted a cryptic message at some point, kind of suggesting this won't be the last we're going to hear from this. And then you retweeted it because we're doing this extra. We do more victory laps than ever before now. We're extra sure.
yeah, sometimes you got to do a victory lap, and yeah,
I'm not
I did,
always right, but this time, you totally nailed it. So and people found that tweet.
It's not always about me, but
People dug up that
sometimes
tweet
it's
though.
about-
Like there were people waiting, like that had that thing like in their bookmarks, waiting to call you out. So right or wrong, you were right on this one. That was a great call. I didn't say it wasn't possible, but I certainly never had the gall to call it out.
Yeah, and by the way, even if he wasn't, people forget about that. But I did hit it. Had a really good idea. He would find his way back in here. But hey, you and I both. I mean, it's crazy. I was supposed to go on Yahoo Finance talk about another topic. This breaks, and I've got 5 minutes to prep for this. And then immediately after Yahoo Finance, that interview, I go on CNBC. And I noticed, you were on broadcast a ton, but this is just crazy. So let me give you my thoughts here. So, and this is very consistent with what I said, right as it hit. So, first of all, he's the right pedigree. At the run up to finding the new CEO, I said you have to find somebody who really understands products and understands Foundry. And that doesn't mean you have to be in it, both of those for years, but enough that you can't get smoked by your customers or internal, right? You're smart enough technologically on the product side to know when your team says, I need 10,000 people to pull this off. You have enough experience to say, no, that's completely BS. This takes 5,000 people in half the time that you've told me that you can do that. He was CEO of Cadence for years, which, by the way, all the tools that for an EDA provider have to connect to a foundry. And IFS is an important thing. First question I got from all these shows was he the right pick? And my answer was, hey, I need to bet. I don't know his strategy, right? I don't know what his objectives are and what his strategy are to pull that off. Only then will I have and it's not a personal thing. I rather weigh in on his strategy and how he's going to go at it. The first thing that Lip-Bu has to do is determine, I think, if there's going to be a split, not split. Are we going to remain in Foundry? How big is Foundry going to be? And by the way, even as a fab. And yes, I have read the employee note he sent out, but recognize, I mean, if he wants to sell the Foundry, what is he going to say? We don't want to be a world-class Foundry? That's not very good on negotiations. Second thing is can he pull in a data center AI GPU, right? That's bringing Intel down in many areas. And quite frankly, they missed the mark. They had the ability. There was a bunch of products that were canceled in this, but AMD found a way to go in and get 5 to 10% market share with a lot less resources and a lot quicker. What happened to Intel there. Gaudi was the right idea, and it very high performance, very high efficiency, but the hyperscalers are building all of their own ASICs there. Final commentary: there will likely be cost cuts, and here's my warning to Intel on cost cuts. If you go in and take a hacksaw to MDF, you will cede a tremendous amount of market share to both AMD and Qualcomm. Okay. Trust me, if you do not have the best product, you will lose in areas where you don't have the best product, which is in the hyperscalers, which Intel is losing a lot of market share on Xeon. And even when it comes to DIY, when it comes to enterprise PCs, enterprise servers and networking, it's not about best product. It's about a good product with really good sales and really good marketing programs and messaging. That's it.
What about analyst relations budgets? Anything to say about that?
Yeah, I definitely, that's the last thing I would cut.
I mean, I could think of a few analysts they could cut, but I mean,
Yeah.
I also think of a few they should probably invest anyway. Yeah, I mean, So, yes, exactly. I was actually in a 2-hour-long sales meeting when that was going on. You ever seen the movie Jerry Maguire, where like he just gets fired and he runs to his office and starts calling his Rolodex, and everybody's lighting his phones up, and then he gets Cuba Gooding on the call, and Cuba Gooding is, like bugging him, show me the, and he's like won't let him off the call, and then you start to see the phones ringing down. That was me. Like I could not get off this call. I had broadcast, I had journalists, I had everybody looking for my comment. Not saying I'm awesome, but kind of saying I'm awesome. Didn't really get as involved in the immediate reaction as I wanted to. But sometimes you do have to run a business and you can't just drop everything all the time. You totally crushed it. You crushed this one before, you crushed this one during. I have a pretty similar viewpoint here. I guess I'd name a couple different things. I do kind of look at Lip-Bu a little bit in the vein of Hock Tan. He's not exactly the same, but I see a lot of sort of similarities in sort of the run the business to efficiency, very EBITDA and growth of margin and income focused, willing to sort of cut off the fringes of things that seem to be sort of excess programming that doesn't need to be done. I can definitely see him coming in. I think your point about the hacksaw is, I don't think that's really where the hacksaw needs to be brought in. I do think there is probably a lot of extra resource inside of Intel. It just got overstaffed and
takes a lot more engineers to do the products at Intel than it does to AMD or NVIDIA.
For sure. And so it's going to be a real careful predicament. I'm not necessarily talking about engineering, by the way. So there's a lot of other sort of, just kind of in the middle roles that are somewhere in between a deep research query on OpenAI and someone that's genuinely like building products.
I got you. Yeah, the sea of cubes, AP, AR, HR.
Yeah, the
marketing, content creation.
Pat, you so prolifically said you told your son to go into engineering or sales, that you either got the what's to go into sales, or you got the brains to go into engineering. But then you don't want to end up in the middle area. Remember you said that, even though you acknowledge that you sort of ended up in that middle area. My point is like that middle area is where I see Hock really looking at the business and the employee count, head count, size, efficiency. I mean, look, you've got to return the company to cash flow profitability. Now, having said that, Lip-Bu is going to be really focused on kind of, I think the foundry split thing is going to come back up. He sort of gave this illusion coming out of the gate, and we'll talk about this as our next topic a bit more, that that he is going to keep things running, kind of one big integrated Intel. But that part of the reason he walked off the board was because he wanted to see the split. So it's kind of like, I don't know if he's appeasing, kind of creating a calmness. My whole TV spiel here was all about stability. The markets hate instability. People hate companies that are unstable. Having interim CEOs did not make the market feel comfortable with Intel's longer term trajectory, despite the fact that I think both of us would agree that MJ did a pretty good job. I wasn't as privy to what David worked on during the time, but like it felt like it was going okay. But look, the market wanted stability. Lip-Bu gave stability. I think the stock will rise in this. I don't think you're going to see a meteoric rise until there's some certainty around what happens to the foundry and products part of the company. I think that is still super uncertain. So I think that, while there's kind of words being used, I don't think he was going to come out in his first email to the entire company and be like, I'm going to split the company up. Like, I just don't think that's how this type of thing works. And I also think there's a lot of external forces at play with policymakers, with the Trump administration, with what optionality he even has to do this, because I stand by my opinion. Intel is the US chip champion for manufacturing at the leading edge. It's the only chance. It's the great American hope for actually being able to make chips below 4 nanometer at scale in the United States. And if anything ever happens between China and Taiwan, it is the only hope that we have of not going back 20 years in history and being stuck at whatever the newest node is. Because I'll cue you up for the next topic, because TSMC is not our hero in the United States.
Yeah, that's exactly right, Dan. And let's just breeze right in this topic. It's somewhat related to the new CEO, but it's kind of not. Dan, I know this was a topic. I know you've been talking a lot here, but I think you're going to lead on this one. But
I'll try to go quicker.
Yeah, we gotta blow through this, buddy.
Well, it's a continuation.
Exactly. And there's just yet, I think this is the 50th rumor about some JV between TSMC, and this time it was TSMC plus a bunch of potential customers at about 50%. Dan, what do you think?
No.
There we go.
I'll take 1 minute, and I'll give it over to you. I don't think it would exceed 20% in any circumstance. I just don't see it getting bigger than that. I do see that some of the posturing from the Trump administration about canceled CHIPS Act, I don't think it was as much about supporting Intel or Micron. I think it was more about all the money we were sending to SK and TSMC and Samsung and other companies. And what Trump basically said is, look, they want our volume. They want our fabless providers. If we basically make that really expensive for them, they're going to bring the manufacturing here. And whether they do or don't, whether it's done before the Trump administration is over, they got the commitment that they wanted was that TSMC would bring at least their newest, the N2 node here. They'd bring some R&D here, but that doesn't solve the long-term problem. We need Intel. We need Intel to have strong IP. We need Intel to be able to manufacture without dependence on Taiwan, their leading edge chips for data center, for edge, for mobile. And if we can't do that here, we're failing. So the CHIPS Act itself hasn't solved any of those problems. So when Trump says cancel the CHIPS Act, that's why he's saying it. I don't think it's about the money. We need to do what Taiwan did to prop up TSMC with Intel. We need to support it. We need to force some manufacturing to it. I know that people won't love me saying that, but we either need to make them strong or we risk suffering the long-term consequences.
Yeah, good stuff, Daniel. I totally agree. So let's go to our next segment, and this is called the flip, where one of us takes a certain point of view. We might agree with both, we might disagree with both. But this week, we are talking about, are tariffs helping or hurting the U.S. economy? So, Dan, let's flip the coin here on who's going to take the pro stance on tariffs.
You know me.
Dan, I think that was you. So go for it, Mr. Tariff Boy.
I am all for the tariffs. Some people that have paid attention to my content may or may not know that this may or may not be my actual stance. That's the funnest part about the flip. But look, Pat, the United States has the world's largest trade deficit. It's in the over $1 trillion heading into this year. The Trump administration genuinely believes that we're being taken advantage of by countries around the world. We have exported almost all of our major industries and manufacturing. We've been kind of devastated on both sides by lower cost manufacturing offshore, and then, of course, high cost of unions here in the United States. Tariffs is a vehicle to potentially create more balance in the trade. Having said that, I'm not only for the idea of tariffs to help the U.S. economy. I think that's about evenness and balance. So if we charge tariffs, whether that's China, who charges us tariffs, the UK charges us tariffs, Germany charges us tariffs, France charges us tariffs. So these trading partners that we kind of act like we're making some obscene and inappropriate gesture to charge them something for our goods and our services being exported to them, don't actually, it doesn't stand on its own merit. The merit of it is this, is you want to make trade fair, then that's fair. Then let's not charge any tariffs. And in my opinion, a lot of this comes down to we charge, we get balanced, we bring manufacturing back. Like I said with TSMC realized that if they were going to pay some obscene amount of tariffs to be able to continue to provide NVIDIA, Qualcomm, Apple, and AMD and others chips, that maybe it is better for them to build the manufacturing capacity here in the United States. So we are in a situation where that is the outcome, that is the goal. The Trump administration, the people that voted for it, wanted to bring stronger manufacturing, middle-class jobs back to America. And by the way, fabs aren't necessarily middle class. That's upper, doctoral level, but it could be cars, it could be making, material goods, it could be, healthcare supplies, it could be, of course, semiconductors for phones and PCs and everything else. We want to bring more manufacturing back. We want to have more fairness in our trade. The trade partners that are screaming and complaining the loudness charge us, and they don't want us to charge them. It simply is imbalanced. There's an opportunity to correct this. I think by putting and imposing these tariffs, we have one more opportunity that I'll note before I turn it over to you, Pat, so you can wrongly try to defend the terrible social ideas of us not charging anyone tariffs. Having a little fun here with you, buddy. Relax. Is there's an opportunity here to bring inflation down. Because in the end, if these countries are smart and if Trump is truly the negotiator he says he is, why wouldn't everyone agree to bring their tariffs down to the lowest common denominator, considering how much they need our goods and services and how much we need theirs? We could bring costs down, take some of those charges out from moving goods around the world, and actually deliver lower cost things to the people that need lower cost things the most.
That was pretty good argument there, Daniel. And again, I'm going to argue this from the tariffs are bad standpoint, which may or may not be my real point of view. But listen, I'm glad you ended with bringing inflation down, because essentially tariffs are just a tax on consumers and businesses. So anybody importing goods, what they're going to do is pass that price on to businesses and manufacturers. And there's a lot of studies that talk about the tariffs in 2018 and 2019 that put those costs right to poor Americans, consumers, and small business. And, it in the end, it really slows job growth and hurts GDP, real GDP, not inflationary GDP, because essentially anything that we produce here in America requires lumber. It requires, let's say, for homes, it requires metal, which goes into building our cars. And if those come in at an increased price, they raise the COGS, which means they raise the prices. And some people just can't afford those goods, particularly with the durable goods. And we saw this with NAFTA, with even washing machines and refrigerators. Hey, come on in and tariff us. It's okay. So, and I think the other thing is retaliation, right? If the current tit for tat is, hey, I put 500 billion in tariffs on you, we get 500 billion in tariffs back on us. Like literally, where does this end? And in the end, it just goes back to my previous arguments, which it raises prices and slows down GDP. I think the best example of this is what happened in the 1930s. It was the Smoot-Hawley Tariff Act of 1930, which, by the way, I'm a student of history. You're awesome at economics. Pretty much everybody is in agreement that said that it deepened the Great Depression. It really got us into this lose-lose type of situation. So in the end, tariffs are taxes on consumers and small businesses. It weakens the job market, shrinks consumer buying power, impacting GDP, and damages our export competitiveness. So there we go. So folks,
Couldn't agree with you less.
No, I appreciate that.
That was a good take. I hope that we can stay friends after this flip.
Dan, I think we can. We have argued about better things.
I'm gonna start taxing my insights. You want to hear my next opinion? It's going to cost you 20% more.
Man, I don't know if I can afford that, though, bro. All right, let's go into the next topic. bulls and bears. We're going to break down market inflections, maybe talk about some earnings from companies. When there's a meltdown, we're going to talk about that. When there's madness in the market, like there is right now, we're going to chat about that. But hey, why don't we start off with Oracle? Right, Oracle came out with I think a triple miss. Correct me if I am wrong there. They missed on EPS by about a point, so maybe they missed on revenue, not by a ton.
They barely missed everywhere.
Sorry,
they barely missed everything. But they
pretty much they missed on revenue, adjusted EPS for the quarter, and then a Q4 FY25 they missed on revenue midpoint, and adjusted EPS. They missed on everything, but that's really kind of missing the point of some of the things that were brought out there. There were a lot, like if you end it there, it's a very immature way to look at the potential of the company and the market. First of all, the database standoff between on-prem and cloud people, it's over. Okay, Oracle has its database firmly entrenched in the top CSPs. This is huge. That was like a 15-year standoff, and Larry won. And we're going to see there was a lot of growth there. Of course, growth I think was 90%. It was huge. They have exascale appliances inside the cloud folks. OCI is rocking, and the talk of Stargate, OpenAI, and XAI, I think, were positively received by the markets. And I think all of this was reflected in the $130 billion backlog. 2027 revenue forecast reflect optimism with 20% growth overall. And I'm going to end Cloud ERP at 16%, much higher than the other enterprise SaaS plays that we have seen out there.
Yeah, the way I headline this one, Pat, is I said, if you're going to post a double/triple miss, why better to do it on the day of a market meltdown than, so Oracle got to do it on a day that already was crap. So the market, it's hard to tell when you've got this kind of high pressure selling on tariffs and on geopolitics and on macros and on GDP and whether people were really disenfranchised by Oracle, or was it like, well, of course it sold because everything sold. It was blood red. One of the worst days, by the way, in 2 years. It looked like the beginning of the pandemic era in terms of the actual selling that day. Not quite, but it was pretty darn bad. Look, I'm going to focus on a few positives here because the negatives are, with all the momentum that Oracle has, maybe it shouldn't have missed. But at the same time, I do think there's a little bit of this great reset going on in the market. Like if I'm a CEO and you and I have talked to a number, I spent time with Bill and Arvin this week. I saw Renee Haas, and I think all of them are sort of okay with the idea. They're all optimistic, but they're all kind of okay with a bit of a forward PE reset. I mean, the stress of trying to hit these numbers, it's not so bad when you have a bit of a sell-off that, the analysts start to say, we're looking at S&P at 20 times instead of 22 times forward. That actually sets that adjustment sets them up for better opportunities in the future to start beating again, which is what people want, beating against current, beating against the guide. So I kind of look optimistically at that stuff. But for Oracle, look, the DB multi-cloud revenue from their big three clouds, 92% increase in 3 months, Pat. So clearly that strategy is working. GPU consumption for AI training, 244% up in the last 12 months. Their AI GPU capacity in Oracle Cloud, they're doubling capacity over the next year. They raised their dividend, which clearly means on a cash basis, they're confident. They raised their dividend 25%. And then you mentioned this, but Stargate, like they've somehow became like one of the major system of cloud provider of record for Stargate. Like you realize when this thing's done, their cloud business could be like really close to on par with the top three just by this investment. Now, again, there's a lot of questions about Stargate. Love that the spend is coming here to Texas. But I'm just pretty optimistic about Oracle. We never like to see them miss, but I do think a bit of a reset during a market decline is never a bad thing for CEOs, for businesses, and of course for investors to find an entry point that, I keep thinking, Pat, that picture of people lining up around the building to buy Tesla at $500, but then everybody's gone at $200. It's like nothing's changed except, a couple of tweets from the Trump administration. So.
Which means a lot today, right? It's
It's a
the
lot,
major avenue that the Trump administration uses for communications, which, listen, I spend all my time. So, hey, let's move into the final markets topic here. And that is Adobe earnings, another enterprise SaaS play that people are looking for those downstream impacts of AI. Did they do it?
Well, they did it, but they didn't project it, meaning this quarter was record for the company, record revenue quarter. Look, I keep my assessment kind of short here because I feel like I keep saying the same thing about Adobe over and over again. Adobe has a little bit of that software industrial complex challenge that I mentioned with like the way that people spend and buy. Just trying to bolt on AI is proving to be a friction where they're going to have to somehow see if they can get the customers to spend incrementally more and how they can do that in the least friction way so that they can grow the ACV on their customers, right?
Yeah.
They need their customers to spend more. Having said that, I mean, their revenue is at record. They've got double-digit growth, albeit low double-digit, but that's been pretty steady. That's what our market forecasts for enterprise software say. It's like it's high single digits. So they're above the forecast overall for the market. But like I said, right now we are in the era of guide-driven market response. Guide was not where people wanted it to be. The thing sold really, really hard. Another great reset. And on top of that, if your guide is bad and then you don't perform, you get double whacked. But at least that wasn't the case for Adobe. My thought is they have strong, recurring, stable revenues. They're diversified across, documents, application CRM, and creative. But there is a more faster crowd. They want to see more AI revenue faster. This has been my continuous complaint about the AI trade. It's not the infrastructure part of the AI trade. It's the consumption dollars to apply to these companies that justify these great valuations. And so I think Adobe could be in good shape. I think a reset's not a bad thing. I think that AI strategy is important. And I'll turn it over to you.
Yeah. So let me fill in your great analysis here. So, I like to look at the sentiment that comes back from the financial analysts, and not that I agree with it all the time. I don't, but it gives a picture filling in kind of exactly what you're talking about here, right? I think on the positive side, people like the metrics that came in through Firefly, right? Jeffries had a comment on that. I would say on the negative side, right, from Deutsche Bank, really they're concerned about competitive pressures and underwhelming near-term Gen AI monetization, which is what you talked about a little bit. So, kind of a mixed bag here, and I am looking forward to what they bring out at their next financial industry analyst. Here's the way I look at this, Dan. Adobe is when you look at large businesses where they generate most of their revenue, I don't think they're at risk. Large companies that have very built out processes with Adobe, regardless if the AI feature of the day is better, Adobe just can't be too far behind and part of the workflow. And then if you look at their full digital experience and how they've put that out, that's another very sticky thing. I think where Adobe could be challenged is, the one-off content creator, right? Who is looking for a one-off tool that can, fundamentally change their workflow, save them some money, be able to double their revenue flow. That's where Adobe is at risk. And I think I need to do a little bit more research to see are they gaining share, losing share in these areas because of it. I don't know. A lot of VCs are getting out there talking about these magic tools, but to be honest, I haven't even come across for my business ones that we are using some non-Adobe AI tools for what we do here on the 6.5, right? We've shifted that for doing segments and supercuts and stuff like that, and we are a small business. So I think I just proved with a one-off that this is the case.
Yeah, there's going to be a lot of demand for it. It looks really good. I know we wanted to talk a little bit about the forecast projections for U.S. economy. We're not going to hit it right now. You and I both did do a lot of broadcasts this week. Maybe the producers can cut in a couple of our comments. I know I went on Fox Business and they asked me if now is the time to buy. And so I know both you and I probably fundamentally believe the AI trade is not dead, that the actual recession risks create more demand for technology because it's deflationary. Hey, maybe even our producers can cut in some of those wise words we said from our segments, Pat. But hey, dude, we did the first show, the first format. How much fun did we have? I gotta say, I mean, it went smoother than I thought. I really expected you to suck, but you were really good.
I don't know, man. You'll get your chance. I mean, I'm the world's best moderator next to JCal, but so I'm the second world's best moderator, and we'll give you such. So
I'll give you top 3, but
I appreciate that. So I just want to thank everybody for tuning in. While Dan is sipping Mai Tais on the beach in Turks, I'm going to be sweating it out, waiting in line to hear AI Jesus bring down the tablets from the hill out on the West Coast. So with that, hit that subscribe button. Thanks for tuning in, and let us know what you think about this show and the new format. Take care.
Some of these kind of short-term pullbacks are all macro effects. Nothing about the technology trade has actually changed. The demand for AI will continue to grow. The deflationary value of tech actually makes these tech names more exciting during kind of tougher, more volatile times, Stuart, because basically companies are going to go for efficiency. AI, agents, assistants, drive efficiency into companies.
I think that the volatility in market, whether you're looking at consumer confidence, whether you're looking at, I'll call it tariff ping pong, is going to keep pushing uncertainty. Imagine if you are the CEO or CFO of a tech company, what do you forecast, right? And a lot of those forecasts have to do with the entire ecosystem of goods crossing lines between Mexico, US, and China. Where do you even decide to build your goods?
Who that is?